All right. Let's see where that puts us for today. Pretty flat, actually, which, was indicated by our open, as I mentioned last night. If we were kind of stuck around 75, we were probably going to stay there for most of the day. We did get a little bit of vol crush at the end of the day, but a lot of the event vol will persist over since CPI was hot today. There will be an expectation that PPI could also surprise to the upside. So where does that put us for tomorrow? I mean, well, obviously much more at the mercy of the PPI print than we would have been had CPI been, well, either a lot hotter today or had it been within expectations, which would have probably allowed us to move over 5,800 up to the more bullish positioning at like 5,820. So all of that shit from last night is just going to roll forward. They're just going to bet on the PPI, or yeah, the PPI print, right? We also have Michigan consumer sentiment, and it is the preliminary tomorrow, so that'll matter, especially following the higher jobless claims that we got today. If jobless claims are up and consumer sentiment is down, we're going to get a contraction of yields at the front end of the curve. Or the contraction of yields at the front end of the curve that we saw today will continue, right? Because that pushes the narrative more towards recession. And so, tomorrow's data could end up a lot like today's, right? Where we get a bump in inflation, but we also get, a push towards recession. And the combination of those two things could leave us trading once again in a fairly tight range, right? So if inflation's up and, consumer sentiment is declined, we get kind of a repeat of today. Okay, that was a V. It was in the box. Would have had to. Well, I mean, it almost was a V, and then it didn't make it. Please, God, no. I know. I know. This is a terrible time, but we managed to hold just under 58.30 on ES. Some of the short puts might allow this to fall into the overnight session more towards 58.20, but I think staying between here and 40 is probably a little bit more likely, especially with that end of day push up. That's going to put some of the sold calls in the money going into tomorrow, and should offer up a little bit of support in the overnight session. This is technically a top. Like, we had three higher tests, all three tested lower, right? And they all failed. So, we might be getting a little bit of distribution here, and that might be on, the elevated job fears and the fact that the dollar pulled back to negative by the end of the day, which does actually do a little bit of damage to the leverage. And that might open up a retest around like 57.86 if we do get a continuation of the failure. So it's kind of caught between a failure and bullish consolidation. We'll have to see how that kind of trend that it's forming breaks down or up, right? But at least it's pretty defined. So, bull signal, bear signal, right? Commodities moved up pretty spectacularly today. We finally got a drop in the dollar, and so precious metals bounced back, which, I mean, I think Bloomberg commodity futures have a little bit too much exposure to, but oil also up 3.69%, pushing $76 a barrel. That's inflationary as well, but you won't see the effect of that on inflation except in like long run inflation expectations. And with the 30-year coming in a little bit lower today, and no tail on it, clearly it hasn't had that effect yet, right? But moving up, and commodities still look pretty good. We got an announcement out of China last night that they opened up a 500 billion yuan swap facility. So a little bit more bullishness for China. Some of that realized today. Still no realization of actual fiscal stimulus, but that will help liquidity in their markets. And I think it's their first swap facility, probably one of many that will be opened in the same vein. Yields still climbing. I mean, dollar hit 103 today, rejected, pulled back a little, but could retest it again, provided PPI inflation is hotter tomorrow. Something I do want to say about PPI being too hot is not good. So like CPI up bullish, right? That helps leverage. PPI up creates risk in equities because of margin contraction. So and especially if those prices aren't being passed forward to the consumer efficiently. I mean, this is something that we dealt with over the spring. It could come up again. So best to mention it now before it does. If we see prices for producers rising at a rate that is persistently higher than prices are rising for the consumer, that is going to turn analysts off of a lot of equities because it will mean margin contractions, because it means that producer prices aren't pricing forward efficiently onto the consumer, and that means that the increased cost of those goods is diminishing gross revenues, right? And so as gross revenues decline, margins contract, and that is not bullish for the forward valuation of equities. Now, the sectors most affected by those, I mean, you'll have to look at the PPI report. I would imagine initially materials and industrials, but some of those costs bleed forward into things like semis. Semis does not like increased producer pricing generally, and semis are a significant part of the S&P market cap right now. So something to think about. Carry trade leverage stayed pretty flat throughout the day. We had a little spike earlier on the bounce, and that was kind of it. The forward yield on vol is remaining high, and actually probably got to soften a little bit with the yield curve uninverting some more, and the 2-year, 10-year spread widening a bit. However, that could contract all over again tomorrow. Like if consumer expectations are positive and inflation is up, we could see the yield curve move more towards an inversion again. Bond vol staying pretty elevated, core is still falling. This is one good reason to stay away from QQQ. Despite the rest of the macro looking really good for increased leverage and for mega cap tech, this is still frightening. Bond vol up is generally not a good sign, especially for equities, right? Skews still not doing much. 57.17% of the S&P above its 50-day moving average. So we are still seeing tech primarily holding this up, right? The breadth isn't really coming in. RSP down 37 points today. Still really struggling, breaking out to a new high. So we're really not seeing breadth, and Russell mid cap, small caps still bleeding, right? Remember that the other part of that trade, that dispersion and push into tech, is that everyone bails on small and mid caps because rates are going higher. Their debt is more restrictive to their growth. Correlation between VX, cash VIX ticking up, both of them moving up today. So yeah, a little less spread there than we had previously, and an increase in that correlation may lead to another push up in volatility. So volatility is still kind of high, kind of dangerous. If PPI is too hot and we get a drop, we may see vol turn back up. Oh, I moved this out. I was tired of looking at the Jan contracts. It's not moving much. So we're now going to be looking towards the June contract for next year. So mid 2025 for rate cut expectations, which are currently hovering around 4 cuts. Higher than 4 cuts, things start to get a little bearish. Higher than 5, probably significantly more bearish. Lower than 0.75, good for tech. Well, yeah, good for tech, bearish for small mid caps, industrials, materials, things like that. Out here, we technically rejected today off of yesterday's high, and we failed to make a higher high, which may be the top of this. Not quite. I mean, we did break up a little bit above it yesterday, kind of closed right at the trend. Would still want to see a failure of 57.67, which was the prior all-time high. We haven't gotten that yet. And then 57.33 to confirm that breakdown, the larger move out on the weekly would need to be confirmed at like 56.69, 55.23. Well, 55.70 would probably be sufficient now. So anyway, I mean, it is. The fact that we got rejected off of the top today is actually kind of very, very bearish. Remember the last time that happened? But popcorn, the last two times worked out so great. There was this one back here, and then this one. Dude, we're going to 6K. Well, there's only enough money to go to 5,900, really. I mean, and then you've got the 1929 trend, which the market's never broken. Like Bruce Willis. Oh God, don't 100-year me. I mean, it's the peak of two of the largest speculative bubbles the U.S. markets have ever seen, right? And that's still not that far from spot. You made it perforated. TA isn't real. It's as real as you want it to be. You send me TA all the time. AI isn't speculation or a bubble. Sure, because it's based on animals. Alright. I will see you guys tomorrow. Everybody have a good night. Later.